Hi, I'm Greg Andrick, and welcome to Business Freedom Conversation Newsletter number 6. So, in this newsletter, we're going to talk about a couple of items that are of concern to business owners. The first one is stagflation. In April of this year, the NFIB, National Federation of Independent Businesses, in their survey identified that now small business owners believe that inflation is the number one problem. And since April, it's now a concern that it not only will be inflation, it'll be stagflation. So we're going to talk about that. The second thing is inflation concerns replaced the fact that it's hard to get employees. We're going to talk about that and what the impact is on your business and what you can do about it. Biden has submitted his budget. It includes a lot of taxes. And he's even made a statement that he's going to try and control inflation with taxes. We're going to talk about that. And then on June 15 at noon Pacific, we're going to have another live stream where we're going to have a panel of experts that you can ask questions to for free. And those experts are going to give a brief presentation about the things that are of interest at the time, which are kind of the things that are in this newsletter. So let's start and go off to the first one. So what is stagflation? Stagflation is defined as when unemployment and inflation are over 5%. Previously, economists didn't think this would ever happen because economists felt that only inflation occurred when the economy was so hot that they couldn't keep up with supply, and then the prices would go up. But it didn't contemplate that unemployment going up because the sales environment deteriorated. And economists used a thing called the Phillips curve. But in 1975, the Phillips curve went out the window. And what they learned that the effect of supply shock, what we're going through now with all the supply chain problems, all the restrictions, and then the fact that you can't get employees, an adequate number of employees to fill whatever product or service that you offer. And so it's these supply problems, both employees and products, that are causing not only inflation, but causing stagflation because the economy is deteriorating because businesses can't execute due to the lack of labor and the lack of supplies. Now, the interesting thing, and these are some eye-opening things for you, is that previously, the previous stagflation period was 1974 to 1982. And that message is strap it on. This isn't an overnight thing that's going to go away. It took 3 recessions in 1980, 81, and 82. And you had a president similar to the one we have now that I think was anti-business. And I mean, Jimmy Carter was famous for restricting deductions of restaurant meals for entertainment, the 3 martini rule, all this kind of stuff. And he was, very rigid, a great person, but I don't think he really understood the economy overall. And I think that's kind of what we've got going on now, where we're not exploring these different things that can be done to improve the economy. Number one is simply oil. So the fact that we have the supply shock that we had in 1974. See, in 1973, the Arabs embargoed the U.S. on oil. Now, we were a main producer ourselves, but we were still importing from the Arabs, and they were angry at us for supporting Israel in the 73 war that Israel had, I guess, with Egypt. And so that caused a supply shock, which caused the economy go down because, does this sound familiar? The price of gasoline and oil products and natural gas skyrocketed, went up 200-300%. Like back then, it was from 28 cents a gallon to, oh my gosh, $1.05. Can you imagine paying $1.05 for dollar gasoline? So right now, in all 50 states, we're over $4.50, and zooming further, California, I think, is almost at $7 a gallon because they have that hefty $1.29 a gallon, and they charge their full 10.25% sales tax. So that's why I think they're around $7 and everybody else is approaching $5. But those are supply shocks. It's going to affect your business. I mean, there's no political spin here. These are things that we business owners have to adapt to, or we're gone. So we're in this period, and it's not going to go away overnight, because some of these things over the last year, and but basically the Biden administration, have kind of been hardwired into the economy, that we're not going to improve domestic oil production. And if you realize, if you look back at it, that was the basis for the Trump economy, was that he allowed all the fracking and oil production and increased the oil leases, and then also lowered the tax rate. One of the things that lowering the tax rate has to do is oil is not a high success rate. There's a lot of the wells that are drilled at great expense don't come in. So the higher the tax rate, that means they drill fewer wells and get less oil, because if you have a high tax and you're going to tax the successful ones, it's harder to pay for the failures. And that seems to be something our current administration doesn't understand. So, and our whole economy is kind of geared to the price of oil. If the oil is really expensive, then consumers can't buy the products that are being produced, because the cost of that is being flowed through, and hence we have stagflation. Now, we may be really lucky, because the consumers in the U.S. are buying a lot, and that's probably with all that money they may give into the government, and the fact that unemployment is so low. And the definition of a recession is 2 quarters in a row where the economy declines, and it looks like the second quarter of this year, 2022, that we may not have a decline, that it may go up. But most economists are betting that the third and fourth quarter will be down, and that by the first quarter of 2023, it will be a recession. And in that case, it will be stagflation, because we're going to continue to have these high prices, and unemployment's going to start going up. The issue with business owners about employment continues to be really large. 23% of business owners said labor quality is their top business problem. Over 10 million job openings are available right now in the United States. Unemployment is at 3.6%, but my opinion on that is you got to be careful with that, because these numbers are heavily doctored. How they define the participation rate, in other words, who's still looking for a job, probably keeps these numbers lower than they really are. But still, employment is good. There's so many job openings. If somebody really wants a job, they can get it. This is, as a business owner, this is something that needs to be absorbed and guide your procedures and your behavior in the future. 50% of employees had at least one interview in the last year. Now, prior to the pandemic, it was believed, LinkedIn ran a survey and said 41% of employees were thinking about changing jobs. Well, now we know from an NFIB survey that 50% of your employees are out interviewing. Half the workforce will change jobs in 1 to 2 years. That's very expensive for you. And to combat, like we were talking about in the previous section, to combat stagflation, the number one tool is to become effective and efficient. You need to get more out of your employees than you were, stretch the payroll dollars that you're paying, and if people are leaving, you know what that does. Half the workforce will I've already said that, but half the workforce will change in 1 to 3 years. 51% of employees leave their jobs in the first 2 years. So that coincides with the number of people that are interviewing. So it looks like it's a sure thing. You're going to lose half your employees over the next year plus. 59% of job seekers research companies' websites, social media, and reviews. Well, what does that mean to you? It means you have to have things on your website and social media that's inviting to employees, that makes it so that they want to come to your place of business and stay there. There's techniques to handle all of these things. And they're now more important than before that these are adopted. So, the common thing is your employee comes to you and wants a 25 to 50% raise, or they're going to take the job offer they just got. You have the likelihood of 50% of your employees doing that. Well, how do you hang on to them? How, that's where this whole stagflation thing is going to come about. Your business is declining, but because of the shortage of employees, because of the Great Resignation, you're going to have to raise what you pay them while your rent is being raised, while your supplies are being raised, while your vendors are raising, if you sell tangible products, the price of that. So there's a lot of concerns in there, but just like there's these concerns, there's ways to structure your business where you can benefit from this. Where when you have these situations where your vendor comes to you and want to raise your price by 20, 30% or maybe more, that you can handle that. There's ways to handle that. There's ways to make that an advantage for you. And remember that you bring the business that they sell to. So it's just like your employee wants a raise, your vendor wants a cost increase. This is what you're going to have to deal with, probably over the next 3 to 7 years. The last one lasted 9 years. In order to retain or attract qualified employees. Now, here's an interesting thing. 93% of employers in the NFIB survey said there were few or none qualified employees. Few or no qualified employees. That's a tough job market for you to get things done, to hire people that will fulfill the service or handle and ship and make the products that you provide. So how do you get around all this? How do you make this something that works? Establish good recruitment practices, manage fairly and communicate often, tackling poor performance early. I advise people sometimes it's going to take 7, 8, 9 employees before you get one that sticks, that's productive. Enforcing company policies consistently, preparing exit strategies. So there's techniques to do this. And this may sound hard, but this falls right into your lap as a business owner, that you have to look at, how am I running my business? And basically, particularly with the younger generations, they're demanding these changes or they don't take the job. And then once they get on the job, they think nothing of quitting it unless you have these accommodations. And they're not really accommodations. It's just the new order of way things are. So if you can accept that and acknowledge that and then alter your behavior, you're going to succeed. And you're going to make this period, you're going to survive this period of stagflation. You're going to handle the inflation. You're going to handle the fact that it's a real difficult task to get those qualified employees, but you're going to hang on to the ones you do get that are qualified and are productive. So taxes are going to be a really big problem. I was shocked when I saw President Biden say he's got tax items in the Build Back Better bill and in his budget that he's going to try and control inflation. It's a pretty accepted economic technique or understanding that raising taxes will increase inflation because everybody's looking for the net after tax return. So if you raise the taxes and that lowers the net after tax return, what do people do? They raise their prices to get the number they need to pay the rent, pay the employees, pay whatever. So, but of course that's on the profit. But then you need a return on your investment. You need an income. So, and it's been proven that business owners will make sure that they make their money first and pass it along to the consumers, their customers, at a higher price if their net is taxed higher and they can't meet their own obligations. Remember, raising the taxes takes money out of your pocket. So Biden's 2023 budget has an item that's really a backdoor tax. He's trying to push through 4-week paid family leave. So that means if you have an employee that has a birth, a death, surgery, medical issues, you're going to have to pay them for 4 weeks. Well, that's a tax on you. That's a direct tax on your net that maybe it's not going to the government, but it's going to your employees. That's a tough one. The increase in capital gains tax, I'm kind of really amazed. Hillary Clinton had it in her platform that she wanted to make capital gains tax the same as the maximum rate that she wanted, 39.6 on operating income. Realize in an inflationary environment, and particularly with Section 179, where you can write off the entire piece of equipment that you buy. When you depreciate it and then you go to sell it, and with inflation, like right now, used cars are an all-time high. They're at an all-time high percentage of their original value because of the chip shortage. They couldn't manufacture as many vehicles, so on. Well, when you sell one, and you're going to have an automatic gain if you did a 179 deduction and it deducted the entire amount of the vehicle. And if capital gains tax goes to 39.6 and it's an operating income item, you see where this is going. It's going to take a lot of money out of your pocket and make it much more difficult for you to operate. And it's not even a real gain, it's inflation. And you need more dollars from the sale of that used item to buy the new one to keep your business going. But Mr. Biden wants to take 40% of it. That's in his Build Back Better in the budget. I don't think they'll be successful, but one needs to know what's going on out there, and that the increase in these capital gains taxes really means it's a tax on inflation. That if things go up because of inflation and the government takes a slice, what does that leave you with? I mean, the prices of the goods you want to buy to replace the item you sold is going to be substantially higher, and you're going to have a net that's substantially lower. And this has been the problem with the U.S. capital gains system anyway. The government never allows you to deduct losses. They're very limited on the losses. It's complicated to deduct capital gains loss, but they sure take their share of the gain if you gain on a piece of property. And then if it's a commercial piece of property, or a piece of equipment used in a business, that when you recover any depreciation you've taken against that equipment and it goes to ordinary income, and you're going to have the rate as high as 39.6, that's going to be a huge dinger on you. I don't think these things will get through. I think the Republicans will keep it from happening, but we need to think about that and see how these things cause the squeeze of needing higher prices and causing a lower activity, because you're going to have less money out of the things you sell. He's also talking about moving the corporate tax rate back to 28%. This has been a platform of the Democrats probably for 12 years. Mr. Obama wanted that. The problem with that, the biggest problem with that, is at 21%, our corporate tax rate is 20% lower than China's. And at 28%, our tax rate's not competitive with China. And we're going where we MBAs go. Everything's measured on an after-tax rate of return. That's why so much investment has been made in China, in India, and Bangladesh, and all these places. Indonesia has a huge amount of production because their tax rates are lower, and the net return is higher when you have your products made there. But then again, there's all these other problems. But the tax bill that we had in 2017 has made it attractive, and maybe there'll be a way to keep that. And in keeping it is important because you're going to be more competitive and have more dollars in your pocket, and that will put less pressure on the overall economy for people to raise prices. Another big dinger for small business owners is coming in this bill is there you already have the 199A deduction, where you get to deduct 20% of your profits if you're a certain size. And I would imagine most of the audience that I go to here is of that certain size, and he wants to limit or get rid of it. And that will be another problem. You'll keep less of your net, meaning you're going to need more. You're going to need to raise prices. You're going to need to reduce costs, all these different things. So there's a lot to consider, but look at how important all this is. Look at how large these swings are. And it's not like this is the end of the story. There's ways to organize your business to make this work for you where the hit is smaller or non-existent. And I bring these things up so that it's front of mind, so that you can get your business in a position where this just doesn't nail you come tax time. So we're going to have another live stream. It's going to be on June 15th, 12 p.m. Pacific. We're going to talk about stagflation and what to do about it. We're going to talk about getting qualified employees and keeping them. We're going to talk about taxes and regulation. We're going to talk about sales in a recession, because that's what's on everybody's mind right now, is a recession is looming. And if it's a stagflation, it's going to take years and one or two or three recessions to tame the inflation monster. Let me give you a mind blowing thought. The Fed has to raise the Fed rate, which is basically the wholesale rate of money to banks, to a rate equal to or greater than the inflation rate to control the inflation, and may have to put the country into a recession. Mr. Biden, in a press conference last week, said that he's turning that over to Jerome Powell, the chairman of the Fed, and going to let the Fed execute the policies. That's kind of interesting. So these are going to be some really interesting and difficult situations for you to manage, and we're going to have some pointers and some experts discuss these things. And then lastly, we're going to have an author, Matt Vance, give a very brief presentation. He's created a book on how to manage your reviews, your social media reviews. And the thing that Matt has done is he's donating all of the profits of this book in the first month to Ukrainian relief. So I think you'll find it really interesting. If you like his book and want to manage the reviews on your business, know that you're doing a good thing, because it's going to benefit the poor people of Ukraine that are dealing with the conflict that they're in. So that's all that I have for our newsletter this week. I hope you enjoy it all. I hope to see you all on the live stream. I think you'll find it really, really fascinating. Again, thanks for following the Business Freedom Conversation. I wish you all well and good business.